Hey, what's up, everybody? Happy Monday! Hope you had a great weekend. Boy, it is cold here in New York City. Cold! Yesterday, I woke up to go to the gym. It was 14 degrees. March 5th, come on, 14 degrees. That's cold, all right? All right, what is going on in the markets? We have a little bit of a sell off at the present time in stocks. Not surprising after the huge rally that we had after that Trump speech. Now, Trump, if you look at what's going on politically, a lot of turmoil right now. A lot of turmoil with Trump's accusation that Obama tapped his phones at Trump Tower. The thing about what is happening right now politically is that, and I think people are starting to realize this, it starts to set back the Trump agenda. It starts to set back the tax reform. It starts to set back repeal and replace Obamacare. It starts to set back, all of the policy proposals because now he's mired in this and it just keeps getting worse and worse, this political turmoil. And it also, I think, raises the confidence of the opposition. They see him perhaps in a somewhat wounded light here. And so that just puts a big question mark over his whole entire agenda. Not to mention the fact that there have been real economic issues that I've been pointing out. The slowdown in bank credit growth, the flat nature of fiscal flows, really no year over year growth in the fiscal flows, the slowdown in the economy. Okay, the fourth quarter had nearly a 50% slower rate of growth than the third quarter. The data that we have seen recently, durable goods orders, vehicle sales, new home sales, housing prices, lots of things have been weak or on the weaker side. And of course, we have the inflation. All these economic factors have basically been ignored by the stock market because everybody has been focused on Trump's policy agenda and the promises that he made with respect to tax cuts and all that other stuff. But now, in light of the political turmoil, at least in some investors' minds, that might make them question whether or not this stuff is going to happen at all. Okay, never mind the fact that it's definitely going to be pushed back till much later in the year. But now perhaps questioning whether it's going to happen at all, because it's not just about the Democrats opposing Trump, which they set out to do right from the beginning of the right after the election, but it's also about now members of his own party. All right, there are deep divisions on things like the nature of the tax cuts, the amount of stimulus for or spending for infrastructure, the border adjustment tax, a lot of stuff, big things, maybe not going to be so big things. And the market is way into the stratosphere. We saw the Snapchat IPO last week, 30 billion market valuation, the company's losing $500 million a year. And they think, that's their word, they think they can make that up. So it's .com land all over again. I mean, that's what I think. So you got that. This week we have the all-important, by the way, the Fedwatch tool, the CME's Fedwatch tool, which it infers or gives a probability based on where the Fed fund futures are trading, now showing an 86.5% probability of a rate hike at the March 15th meeting. Now, Yellen, I've spoken about this, Yellen and her team over there at the FOMC, they're a bunch of sheep. They listen to the market. And I explained in the past how ludicrous and ridiculous this is when you are the monopolist. I said that it would be like John D. Rockefeller, of Standard Oil, back in the early 1900s or late 1800s, asking his little puny competitors, like, what price should I price my oil at? No, you are the monopolist. You control the market. You set the price. But it's not like that over there with Yellen and company. So I think the fact that they have an 86.5% probability in the market That is the market telling them. They feel comfortable with that. They'll go with that, okay? The bond market vigilantes, they'll listen to what they say. I mean, the whole thing is completely absurd. I could, my 16-year-old son could run the Fed, and for that matter, could run the economy better than all these numbskulls that are doing it right now. Oil prices a little bit lower. By the way, today is Monday, so you know what that means. I'll be busy working on finishing up the MMT Trader issue for this week. So after this video, you probably won't hear from me till later on this afternoon, early evening when I send it out. I started to go over some of the data. A big build. By the way, there was a big build in gold long open interest by speculators. I said that. Now remember, the CFTC's data runs through last Tuesday. All right, so what day was that? That was the 28th of February. All right, and that's when gold ran up to 1260, 1263. So you had a big increase in net long open interest. And I said that in commentary here on videos. I said that in emails I sent out. That made the market top heavy. It made it ripe for a correction. And now everybody, they're talking about the Fed rate hike. The zombies, they do the same thing every time, folks. Albert Einstein's definition of insanity: you do the same thing every time, expecting a different result. So they keep selling the gold when they're scared of a rate hike under this false, story about rate hikes being bearish for gold. As soon as the Fed raises the rates, what happens? Gold runs up 150, 200 bucks. Okay, it's going to be the same thing this time. Same thing with the dollar. They buy the dollar, the Fed raises the rates, and the dollar dumps. I've been selling into the dollar rally. I'm short dollar yen, some other things. So I will be writing the report. It'll be going out later today. If you want to get the report, go to my website, pitbulleconomics.com. Click on the tab that says products, and you'll see a link there that says get the 30-day free trial. Actually, it's right on the front page of the website. Get the 30-day free trial. Get it. And in the meantime, you can look at all the back issues. So that's it for this video. I'll be back later. Have a great day. Make a lot of money. See you later, everybody. Bye-bye.